T1 Energy 122% just this month, and famous AI investor Leopold Oshbrenner has just bought a huge stake in the company. The revenue has basically gone from zero to $755 million. And a short seller says the whole thing is quote unquote China hustle built on tax credits, which is not allowed to claim. With the DOJ and the SEC already asking questions, which one is it? Is this the next great American solar story riding the AI power boom, or is it a mirage about to get exposed? This is T1 Energy, and it's one of the most genuine two-sided stocks on the market right now. So let's break down both sides. The ticker is called TE. Let's do a quick background because this is a new name. This company used to be a Freyr battery startup, and in 2025 it rebranded and pivoted hard into American-made solar manufacturing. The stock trades around $8 to $9, but around is saying a lot because it's been wildly volatile. And I want to be upfront, I don't have a clean buy or sell rating on this one like I do with some other names that we've talked about on this channel, such as, SanDisk or Nvidia. And by the end of this video, you'll understand why. So first, let me give you my framing. What I would really call this company as is a very high risk special situation stock. The whole thing is pretty much summarized in one sentence and comes down to one thing. Are the US tax credits real? With them, it runs positive margins. Without them, the margins go deeply negative. A short seller called Fuzzy Panda says they're not real because of hidden China ties. The company and at least one analyst says they are. And the DOJ and SEC are deeply involved. The bull story is genuinely exciting, but the downside is existential and it's unresolved. It's essentially a coin flip situation. One regulatory ruling, a tiny event-driven trade at most. It's not something to underwrite as an investment until that question clears. So what does T1 actually do? It's two factories. G1 in Dallas, a solar module plant is real and it's running, and it produced almost 2.8 gigawatts of panels last year. And it's been independently rated as one of the world's best module facilities in the world. G2 in Austin, a solar cell plant, still being built, targeting first production by the end of 2026. This one's the key to the whole vertical integration story, but it's behind on funding and it still has about $225 million still to raise. The pitch tying it together, AI needs enormous power. Power increasingly means solar, and US policy pays a premium for solar that's actually made in America. Let's steelman the bull case because it looks strong. Four things drove this stock up 122%. One, the revenue explosion from $3 million to $755 million in a single year as Dallas ramped. That's a real factory selling a real product. Two, smart money loading up. Leopold Oshbrenner, one of the most followed thinkers in AI, put about $44 million into this name. So when a big powered investor like that, puts a flag on this company, people follow. Three, the macro story. If AI really does trigger a surge in US electricity demand, domestic solar manufacturing becomes strategically critical. Four, analyst backing, probably the weakest case of them all. Roth Capital reiterated a buy and raised their target to $15, calling it a top pick. So on its face, this could look like a winner. Now the numbers and the asterisk that kind of changes everything. I told you revenue was $755 million. First quarter adjusted EBITDA hit record $9.1 million. Their first taste of profitability. It all sounds great, but like all things, there's a catch. That $9.1 million includes $41.4 million of Section 45X tax credits. Credits the company booked but has not yet received. If those credits get reversed, which is the core of the short thesis, that record positive $9 million flips to a negative $32 million. And operating margins go from plus 6% to minus 31%. So the profitability is entirely and completely dependent on those credits being valid. Hold that thought. As any great investor, you should also look at the bear case and the short thesis from the other side, which brings us to Fuzzy Panda. It's a firm that's publicly short the stock, and I want to be very clear here. These are allegations. they're disputed by the company, and they're unproven. But they're specific and serious, so you have to weigh them. And there's 4 big ones. One is the hidden China ties. They allege that T1's core technology comes from China's Trina Solar. And that maneuver T1 used to look compliant with US rules, selling the IP to a Singapore company, is a sham. 2, the customer. They claim 99% of Q1 revenue actually traced back to Trina, a related party, with invoices showing T1 kept buying Chinese sales even after executives said they'd stopped. 3, the credits. That $41.4 million in tax credits, they argue it's ineligible, implying a restatement and over $200 million of credits at risk this year. 4, regulators. They cite DOJ and SEC subpoenas. And note, Trina was added to a US list of Chinese military-linked companies. And again, these are allegations, but these are very heavy allegations and something we definitely have to consider. So it all comes down to this single crux. There's a US rule called FEOC, Foreign Entity of Concern, that basically says if a Chinese entity is too involved, you can't claim the big Section 45X manufacturing tax credit. And that credit is the entire difference between a profitable T1 and a deeply unprofitable one. So if the credits hold, the margin stays positive. The AI story is intact, financing comes together, and it can re-rate on the Oshbrenner narrative. If the credits fail, the margins swing to minus 31% and you get an earnings restatement, $224 million in credits clawback, and real ongoing pressure. It's the same company, 2 completely different valuations, and that's the gap. That's the whole trade. Now, in fairness, the bulls definitely have a real rebuttal, and this isn't one-sided. Roth Capital pushed back hard, calling the reports misleading, and made some fair points. Booking tax credits as a cost offset once you've actually produced and sold the panels is standard accounting. And critically, T1 already sold $160 million of its 2025 credits to other companies, which suggests those credits are real and monetizable. Management maintains that it is fully compliant. On the other side, Fuzzy Panda says it has actual invoices, not just opinions. So you've got a 5-part series. So you have a credible analyst on one side and a documented short report on the other. The honest answer on who is right is we just don't know yet. And we just don't know yet is a very hard thing to put a long position on. So let's talk about valuation. How do we really value this? It's hard to really put a single number. We can really only do a barbell analysis and kind of, estimate the bear, bull, and the cleared case. So the bear case, if the credits fail, I will put a number around $3.5, which is nearly down 60%. A base case would be pretty much $9, flat, overhang lingers, dilution drags, and we're still, uncertain about those tax credits. And then the bull case, $15, up 76%. The credits are upheld, AI power re-rate, and that's Roth's target. And notice the shape, because this resolves on a yes or no ruling. The stock probably doesn't sit politely in the middle. It likely lurches towards one of the tails. That's exactly why, if someone is insisted on playing it, I'd size it tiny and treat it as an event-driven bet, not core holding. So what's actually going to resolve this? These are some key dates that you should keep in mind. Earnings in August, any restatement or detail on sourcing, the G2 Austin financing, whether they can close that $225 million gap, which itself depends on the credit question. The FEOC determination, the binary itself. The DOJ and SEC, any formal action would be a serious negative, and G2 first production at the end of the year delivering on time would directly refute the behind schedule claim. These are your scoreboards to keep in mind. So the bottom line is I can't really underwrite this long because there's just too many risks. It's not because the bull case is wrong, it's because there's so many unresolved things. It's the tax credit binary, the live regulatory subpoenas, a possible restatement, heavy dilution. They just doubled their authorized shares. China supply chain exposure, execution risk on a factory that isn't financed yet. This is bottom line is that this is a real US solar growth story sitting on top of an unresolved fraud allegation. Company, based on a credible short seller says is invalid. So while the regulators clear this up, this is a name that I will keep my eye on. If T1 gets cleared, the bulls are going to win big. If it doesn't, the model breaks, and it's a very event-driven trade, not an investment. The AI power bull case is real, and Oshbrenner is in. I don't know if you're in, but the profit base hinges on the tax credit that the short seller is actively fighting in public with regulators involved. So until that clears, there's no shame in saying I'll watch this one and until I know more. That is the discipline of investing. So if you found this video helpful, I try to take a hyped, controversial stock and present my thesis on it, giving you guys both sides. Please subscribe. I do try to do at least one of these a week, and tell me what you think. Do you think the T1 is going to get cleared? Are the short sellers right? And disclaimer, as always, this is not financial advice. I make these videos for educational purposes only. So until next time, talk to you later.